Hey. Hey guys, it's Sean Duro-Fadipe here, SDF if you will, and I'm delighted to come your way again today. So what is it I have for you today? I want to show you how you can profitably trade crash and bomb from kill zones, okay? Just before we proceed, okay, I want to encourage you to subscribe to this channel if you haven't already done that. Then also endeavor to click on the notification bell right beside the subscribe button so that every time I upload something on my channel, you get notified about it. All right. Thanks in advance for that. All right. Okay. So back to the business of the day. How do you profitably trade crash and boom from Q zone? First, what is a Q zone? What is a Q zone? Okay. Now, a Q zone is where price flips from acting as either old support to new resistance or old resistance to new support. Now here is what this means. Here, this zone acting as what? As support. So price dropped, couldn't break this zone. It rallied up, it came back, couldn't break this zone. So this is our support. Alright. But note that eventually price broke this zone. And when price broke this zone, price was going to go higher, but this zone rejected price. Okay, so on this occasion, this zone was acting as resistance. It couldn't break this zone, it was acting as resistance on this occasion. All right, so price got here, it dropped, now it's going back into that zone. It's going to rally into this zone, it's buying into this zone now. Now we are going to envisage. So here is a potential resistance. Okay, here's a potential resistance. This zone has flipped into a resistance here, and so there's still very high probability that's also going to flip into resistance here. So we're going to envisage that price will get into this zone, and then this zone is going to reject higher prices, and then price is going to drop again. All right, this is what this arrow is showing. But then this is not just, you're not going to just envisage that price is going to get into this zone, get rejected, then go into a buy. You know, there are a few other factors or other conditions you have to look out for confluence before you take that decision. All right. Now here's another image showing you what a Q zone is. All right. Again, it is where resistance flips into support or support flips into a resistance. Now look at this. On this particular occasion, this zone was acting as a resistance. Price couldn't break it. Price going here, there was rejection, then it dropped. All right. After this zone, it bought again into that zone, but this time this zone couldn't hold it, so it broke it. All right. It broke it. It bought for a bit, then it dropped again into that zone. Now it couldn't break this zone because there's a rejection here, and from this zone again, it went into a buy. So here, this zone flipped from being a support, from being resistance to support. All right, this is it. I hope this is clear. Let's proceed. All right, so the next question I want to ask is, how do you find this Q zone, since they are potential high probability trading zones? All right, high probability trade zones. How do you take advantage of this? How do you find it to begin with? Because really, if you cannot find it, then you cannot take advantage of it. So what are those things you need to look out for when you're trying to spot it? One, you must find a trend. Now, it's not just finding a trend. It must be an obvious trend. It must be a very conspicuous trend. All right, it must be a trend that you can easily see. All right, so easy that even a child will be able to spot it. Those are the kind of, trend you want to look out for. All right, that's one. Two, you want to find a super high probability area within the trade, and identify that trend. So you want to look for a zone within that particular trend, so you can take advantage of that trend. All right. Now here is another example. Remember, first I said the first condition is for you to identify a very, very obvious trend. Now here is an uptrend. As you can see, we have higher highs, and higher highs and higher lows. All right, so here it's an obvious uptrend. Okay, now take a look at this. Price bought into this zone. It served as resistance, right? It couldn't break this zone, so it came down, it dropped. It bought a bit, it got back into that zone, it dropped. Still serving as resistance at this point. Now finally price came into this zone, it violated this resistance, it broke it, it went all the way up, then it came back into this zone rejected this price, and after that price rallied. All right, so here is a potential kill zone. As you can see, this is the potential kill zone. This is a zone where price has flipped from being resistance into being support. Okay, now please note that it's not just enough for you to go into a buy just because this is a kill zone. No, you are not going into a buy. You are going to need more than one reason to get into this trade. Okay, that is why I would say confluence is important. Confluence is finding more than one reason, to make your trade entry. There has to be other things that conform. There has to be other things that conform to your ideology for you to make that entry. So confluence is key. All right, so you want to look for other factors that are going to confirm that entry. So first thing is we've identified the Q zone. Then you're going to also have to, you're also going to have to use some other factors to confirm this entry. Here is one in this case. Here is an engulfing, bullish engulfing candle pattern. All right, this pattern has engulfed the previous bearish bar. As you can see, this again here is an indication that price is about to change direction. All right, so if we made our decision based on 1, Q zone identified, 2, bullish engulfing bar, then you could have gone into this trade for a buy. Remember, we are talking about crash and boom here. Yes, it applies to all assets, but here we're talking about crash and boom. All right, so here is how it applies. Okay, now we've gotten a bullish candle, so you could have entered this trade, a bullish engulfing candle that is, then you could have entered this trade, then wait on it, rally up. All right, rally and enjoy that ride. Okay, that's for an uptrend. Now here is a downtrend. Now look at this. Price dropped, price sold. This price, it was selling. All right, market was selling up until this zone. Now this zone is 7. Okay, first, this is a downtrend. Remember I said the first thing is you want to see a very obvious trend. Now this is an obvious downtrend. As you can see, lower lows, and lower highs, right? Lower lows and lower highs. So this is a downtrend. Okay, now that we have identified the downtrend, the next thing we want to see is we want to take our time to pick out, spot a price flip. All right, we want to spot a price flip. All right, so we can identify our Q zone. Now look at this. So price dropped into this zone. This particular zone was acting as support in this case. Price couldn't break it, so price got into this zone, then went into a buy. All right, went into a buy, and shortly after that, price fell, came back into this zone. Still acting as support, came into this zone, then it rallied again. All right, then shortly after he bought for a bit, shortly after he sold again to this zone, but this time this zone was violated. This zone couldn't hold price. This zone could not hold this price, so it broke this zone and went into a sell. Now what are we now going to be looking out for now that this zone has been broken? The zone 7 as support has been broken. So what we are going to wait for is we're going to wait for price to come back into this zone and see if it's going to get rejected. All right, if this zone rejects it, then that will give us our Q zone. If the zone rejects price, then that is going to give us our Q zone. All right. Now, price going into this zone now, so you're going to be on the lookout and envisage that price will get rejected in this zone, so that we can. All right. So this is a Q zone, right? So we're going to envisage that price is going to get into this zone, and we'll watch out if we are going to get a rejection. If we get a rejection, that is to tell us that this Q zone might hold. Okay. Remember, you're not going to just make your trade just because this Q zone has been identified. You're going to have to wait for confluence. Okay, you can use your market structure as a confluence. You can use candlestick patterns as confluence. Okay, so in this particular one, we identified a bullish engulfing candle, and that we use that as a confluence, and we pull the trigger on this trade, and we could have done a buy. All right. Now, if this was spotted on a 1 hour candle, this means that we could have been buying for how many hours? 1, 2, 3, 4, 5, about 6 hours there. All right. Now, this is it here again. So we are going to envisage that price will get into this zone. Then if we spot a rejection, that means this zone is going to hold. And if this zone holds, that's first condition. Second condition, we look for confluence in order to pull the trigger on that trade. All right. Okay. All right. In order to pull the trigger on that trade. Okay. Now, guys, this is it. This is everything you need to know about the Q zone, how you need to put your trade in the Q zone. But then there are still a number of people that would prefer that. There's still a lot of people that would prefer to just have access to a system that can help them, that can pinpoint where they should make an entry and pinpoint when they should make an exit. All right. So I'm delighted to introduce to you the Swing Commander. The Swing Commander is our new proprietary system for you to place a trade, use the signals to swing, swing trade, basically. Now, this particular system hasn't launched yet. For every member of the inner circle is eventually going to get access to this, but this hasn't launched just yet. Okay, but once it launches, everyone on the inner circle, everyone that's been admitted to the inner circle successfully. Now, I'm not talking about those that were given, that just took a few steps and they did not follow through. Those are not the people I'm talking about. I'm talking about people that follow through the process. Okay, these are the guys in the inner circle. They're going to get access to this particular system. And yes, price action, market structure is king, and that's what we're all about most of the time. But of course, a lot of people still find this useful because it comes as a complementary tool to what they are already doing. The complementary system works well. Now take a look at this. Take a look at doing a sell. You see this thing that looks like a snowflake, right? It's not Christmas, but here we have a snowflake. All right, so here is something that looks like a snowflake. So imagine you coming a sell, doing a sell, pulling the sell trigger right here and holding on to your sell all the way till you get a counter signal. Here is a counter signal. This signal is an indication for a buy. Okay, so you could have held onto this trade up until this point, so we got this counter signal. Then you exit this sell, then position yourself for a buy. All right, then you ride on this buy all the way. Okay, again up until you get a counter signal, which is here, another sell signal here. So we're going to do a sell again to the very bottom. All right, then you hold on to that trade, hold on to it till we have a counter signal. Then you enter again here, you do a buy all the way. Here again you do a sell. So this is how this works. Okay, and here we have our fibs. All right, so essentially guys on the inner circle are going to have access to this, and yes, they'll be able to use this to complement their price action and market structure trading. All right, for swing trading, and they'll be able to hold on to trades longer, 1 hour, 2 hours, the entire day, even days. Okay, now this is the aim, this is the purpose of this, for people to be able to place trades, hold on to their trades, go about their normal business without panicking that they have a trade running. Okay, just know that your parameters are set and live your life without having to stay glued to your laptop or your phone or whatever it is you're using. All right,
This is the purpose, guys. This is the purpose. All right. Now, if you love to have access to this, you just feel free and reach out to me. Thankfully, we have this thing running now. Thankfully, we have our quarantine offer running right now. So you may just reach out to me to find out how you can take advantage of that. Okay, feel free to reach out. In the description below, you're gonna have my contact and how you can reach out to me on WhatsApp. Feel free to reach out, and you may just be able to take advantage of our inner circle quarantine offer. All right, thanks for paying attention, guys. Sorry about that, guys. So I figured that I haven't shown you on the chart how you can actually like an example of how you can locate this on your chart, then trade it right from your chart. Okay, I realized I didn't do that before I ended that other call, so I had to come up with a new one so we could have very concise training. Okay, so here is what we need to do now. We're going to move over to the chart, try to pinpoint kill zones and see how we can trade them. All right, so let's move over, guys. Let's move over. Alright, move over to the chart. Okay, let's try to spot some of those zones so we can see it. Great, here is the perfect one. Here is the perfect one. Look at this. This was resistance, right? This was resistance. Price was getting into this zone, getting rejected, and it was going into a buy. Right, this support, this price going to the support, couldn't break it, then it went back into a buy. It came back here to test the support again, there was rejection, then it went back into a buy, then event finally came here and it broke this support and it went into a sell. Right, after this sell, price rallied into the zone, but this time this zone flipped from being support to being resistance, as you can see it. So price rallied into this zone, right? Now there was rejection. All right, so it moved, couldn't break here, there was rejection, so this flipped over. This is a kill zone, right? This is our kill zone. Now it couldn't break this. Price came here, he rallied, it couldn't break this zone, then it sold. Right now it came back into this zone, it couldn't break it, then it sold. Okay, so if we were going to trade this, we could have used this as our kill zone, this particular spot. I'm just going to grab this. I hope this is making sense here. So we could have waited for price to get back into this zone. Okay, after it has been rejected a number of times, now this zone is holding. It has flipped from being support, now it's acting as resistance on this occasion. So we're going to wait for price to move into that zone. We're going to try to see if there's a rejection, and once we spot a rejection, remember, it's not just enough to go into this trade just because you spotted a rejection. We want to see, we want to have more than one reason for pulling the trigger on this trade. Now, what other reason can we possibly have here? You can see now that we have a bullish candle. This looks like a bullish engulfing bar, as you can see it here. Look at it here. You can see that this particular candle has engulfed the previous one, right? Look at it. This is the week, this is the week, and this is the week, and this is the other week, right? This is the other week, which means what we have here, it's a bearish engulfing pattern. Bearish engulfing pattern, which is another confirmation that price is about to reverse on this point. All right, so price actually going to this zone. We identify this zone as a kill zone, but remember, we're not pulling the trigger on that trade just yet until we have a confirmation. And now on this occasion, on this particular occasion, we had this bearish engulfing candle. All right, this is a candle that engulfed the previous bullish bar, and from that that will serve as a confirmation. So we'll pull the trigger on this, and then we'll do a sell. Now if we're doing a sell from that point, then we'll probably continue on that sell. We could have held on to this sell and used this is our swing low, right? So we could have used this point, this point we could have used it as our take profit, okay, because this is our swing low. So we could have held on to this trade, hold on to this sell, let it sell up onto this point. So if we were holding on, you probably would have held on for 1 2 3 4 5 6 7 8 9 10, this for about 10 hours. You could have entered this trade on this candle, then you could have held on for 10 good hours. This is the first take profit, right? Now you may also use, you could take your partial profit here if you want. You could take partial profit here, then leave the rest to run. You could also engage your fib, extension, so you can use your fib extension to also monitor. I won't go into that in this video, I'll probably do that in another video, but you can use your fib extension to determine a potential take profit, okay? But for now, you could have used this swing low as your first take profit, then hold on to it, use your Fibonacci extension to determine the next potential profit, maybe 161.2% or something, you know. That way you secure profit here, maybe about 75%, or you could do 50%, then take 50% profit, then leave the rest to run till fib extension maybe to about 161.8% or thereabout, okay? Using your fib. We'll probably do a fib video much later, but that's the message I wanted to, you know, bring forth to you today. I hope this makes sense. All right, till I come your way again, keep safe at this period. Happy trading, and I'll see you on the next one. Cheers. Come your way again. I hope this makes sense to you, and I hope you start taking action based on how you can identify Q zones and how you can trade with those Q zones. Thanks for the attention. See you on the next one. Cheers.